In your markets news now, Asian markets ended the week on a positive note with the Hang Seng Index the star performer on the day. This as U.S. economic data appeared to suggest that the U.S. is headed for a soft landing. U.S. GDP data for the second quarter showing that economic growth came in at 3%, while jobless claims declined to 231,000. The Nikkei share average rose by 0.74%. The Hang Seng Index ended 1.14% in the black, while the Shanghai Composite Index was up 0.68%. Over in the United States, the major indices ended up with gains, although the Dow Jones Industrial Average hit yet another all-time high. Nvidia stock continued to take a hit after the release of its results on Wednesday. The Dow Jones Industrial Average ended the session up 0.6%. The S&P 500, however, closed flat, while the tech-heavy Nasdaq Composite actually declined by 0.23%. Here at home, the rand strengthening to a 13-month high earlier, supported by improved investor sentiment on signs that the domestic economy is starting to gain momentum. The rand trading at 17.64 against the US dollar, 23.24 vis-a-vis the British pound, and 19.54 against the euro. The JSE is a tad lower, trading at about 0.2% down. Looking at commodities, gold is trading at $2,517 an ounce, while platinum's trading at just over $942 an ounce, and Brent crude oil is at $79.29 a barrel. Warwick Lucas, he's from Vunani Securities. He's going to be giving us his reflections of what's been happening in the week. Thank you very much, Warwick, for joining us. It's nice to have you back on the show. Just give us your reflections of what has taken place in global markets in the past week, what the key drivers have been, and of course, what you expect to be happening or driving the markets going into September.
I'm very happy to be back, and I would say that the drivers for September perhaps might be best described with a briefest synopsis of what happened in August. And what we could say about August was, well, gosh, that was a quick bear market. And I think it was also a month in which we rediscovered Mark Twain's point about liars and damned liars and statistics, because what happened is that we had a bearish first half, courtesy of non-farm payrolls that looked very weak, and then we subsequently discovered that, in fact, unemployment had not been correctly calculated for quite some time. And, oh my goodness, there were 800,000 jobs that had disappeared that nobody had noticed. So there you have it. Basically, the U.S. economy looking a little bit weaker than everyone thought. And the net response from the Fed's point of view, especially in the context of its annual bun fight at Jackson Hole, was, well, okay, because it's looking so soggy, perhaps we are going to start turning to cutting rates after all, which I think will be quite welcome. The market has been looking for it for quite some time, has been concerned that it's not showing up, and I think there's quite a sense of relief that it does look like those rate cuts are going to show up, and that's why you're seeing those strong index numbers in the Dow Jones and S&P 500. Yeah.
So, Warwick, as we head into September, what's the outlook for commodities, and is gold likely to continue to remain at the highs that we've been seeing of late?
Okay, so from the US side, I mean, the data is sort of generally quite supportive of commodities, and most of the OECD is staying on course with the green economy transition. China, I'd like to see some more accommodative monetary policy from them, as the economy is really just taking over and not an awful lot better. Gold is a bit of an eclectic one. It generally likes a bit of inflation to really get running, and that of course looks like it's contained, but gold also doesn't mind it when the cost of holding comes down, and if rates get cut, so do the cost of holding. So that one's going to chart its own course, but it looks like a broadly supportive environment still for gold.
Yeah. So before, we used to lament about the level of capital inflows coming into South Africa, or the outflows that were happening, and, you know, with foreign investors going out of South African capital markets. What's the status now, particularly in relation to investment in our South African bonds?
Right, so I think it was largely outflows for the last 8 years, approximately 1 trillion rands worth in the last 8 years. I'm pleased to report in the last 4 days we saw about 13.3 billion rand enter South Africa, and it's generally been a positive month and indeed a positive year. And that's really good news because, frankly, we are a country that needs to depend on the kindness of strangers to borrow and support our necessary infrastructure. It's a good-looking picture. The outside world likes our GNU.
All right, we're going to leave it for now. Thank you so much, Warwick Lucas. He's a portfolio manager at Vunani Securities.